The trick to playing like FOMC in these like high volatility moments, if like let's say like IV is in effect for an option, you're just talking spot price. Like you got to think like at some point, whenever there's an event happening, like liquidity's got to be taken out on each side. And like when there's been like consolidation, like we had like before, like you got to know the market's getting ready to move. And you got to think like, if you're fading towards like the upside, like with relatively low vol, like, you should be thinking that at some point there's probably going to be a pierce to the upside of either some structure, whether it be the high day or some sort of resistance above that's going to sweep out orders above. And then that they then have to go for the downside orders, in a normal market, pending liquidity doesn't step over that, then they got to sweep downside and go for stops down there to search for higher liquidity to let bigger players be able to fucking enter so they can facilitate liquidity better. And so like you got to be prepped for those moments. And like I tell Trent all the time, like he makes a joke about like the euphoria candle. Like generally the candle that causes you to have the most feeling is 99% of the time the candle that's sweeping liquidity and blowing out fucking stop losses. And like those will typically happen at like your moving average areas where like a lot of retailers like to buy your high a day spots, low a day. Like people don't expect those things to happen. So like when those structures get taken out, like when the high a day pierce happens, like that's taking out all the people who shorted the first high a day and then the people with the stops above it. So like when you see it pierces the first level, it doesn't stop right at it, it goes a little bit above. It's because it's wiping out people who have stops predetermined there already.
Hey, that was really good way of explaining it. I have a quick question though. That
Yeah.
liquidity, so like right before every big move, I always notice they do that. They run it up or run it the opposite way,
Yep.
right? And so what am I looking for to not get caught right before that, like in the volume profile? Am I looking for like so on the
Well,
bigger
I'm
time
not talking
frame?
from volume profile. This is just, you can look what I just spoke about. You can candles is perfectly fine way to fucking look at it. You don't need the volume profile to be able to identify that.
They'll
So
top a
like
certain range and bounce right away, like
yeah. So
instantly.
like you gotta kind of gotta think, right? So we have like you gotta look where you are in the chart, right? So like if we look at like the hourly, right? I don't know, Trent, if you want to flip to the hourly. But like we've trended quite a bit probably the past, I don't know, week and a half or so, give or take. We're leading into an event. Volatility is starting to price relatively low, right? So when volatility like the VIX is priced around like, just below a 20 handle, right around a 20 handle, that's going to tell us that puts are being listed on the market for a below average price than to what it's trading at. And that's also telling us that a 20 VIX, the SPX is going to move within 2% ranges per day. So when we know the market the past couple of days, let's say, has under delivered that, or for the day has under delivered that 2% range, one, that is a possibility, of an outcome that to happen. At some point, it's going to make a range, and if that 2% is, let's say, 100 points, then that could be 100 points up or down. It doesn't necessarily have to be a particular direction. Unless if you wanted to analyze the direction, you'd have to go digger into the volatility of each chain for options. But like, so like in judging by the hourly, like when we come back up and we start to hit these significant levels being like 4,000, 13,000 in the NASDAQ, which is a very algorithmic number. Like, so when you start the day like today, we have FOMC and then, the market opens and, we're doing our thing. We start to make that, move up for the first day, it comes back down, and then it starts consolidating before the event. If we're, let's say, relatively, we had like 5 red candles before FOMC happens. At that point, my thing that I'm thinking in my head is, all right, they're gonna either try to sweep the book down really fast and then run the price up to go possibly pierce high a day or whatever the next high is. You're always thinking if like you're trading in like a bullish trend that the next pierce is always going to be high a day. That's just kind of like a rule of thumb. So like then when you do get that pierce as a scalper, one, that's a get the fuck out moment. And then 2, if you're looking to go short, it has to be a pierce of a new high. It's not just under or just about, it has to be a brand new high. So if that high is 13,000, it needs to be over that 13,000, 13,000.25. It needs to be above that. that's how you know that orders are going to start getting tagged in the fucking books, because when you're looking at the price ladder, orders are going to be placed at 13,000, 13,001, 13,002. You're looking for the liquidity that's at those levels to get pinged off. So like when you get that pierce and then the market does its move down, you have to think, okay, now that we have a move down, it needs to make a relief move back up, because no market moves in one straight direction. For every down candle, there's an up candle to go with it, because people are going to buy back. So if you get a big short, people are coming in, you get another 5 red candles going down, you got to expect that people are going to buy those positions back if you're short. Because if you're a short seller, you enter short and then you buy back to close, which is buying pressure in the market. So oftentimes, like how I said, this was a potential dead cat area. The market bounces back up to then pierce this range, and that any range that you see, that is liquidity. There's a whole liquidity range you have to treat, and there are players in there. So that's why it pierces just above that range, tags the people who are probably either short or long from that area, and then we'll come back down to create the new next level. So like if you're continued in shorts from high day here, you're looking for this level to give up and then create a newer low, rolling into the close. It's just having to expect those those lows and highs to be fucking broken, and then you can get more advanced to that if depending how well a particular product. Like if you're watching or reading tape, like for SPY, like an average market maker algo's a 2,500 lot, and then for QQQ it's 41 and 4,200, and then sometimes those algos will double up in times the market makers are bracing for more liquidity in the markets, like an FOMC event, and then there'll be a 5,000 lot for SPY, and then it'll be 8,200, 8,100 for QQQ. And then those are things you start to recognize over time. So if we go down for the next 2 or 3 days, I'm gonna get ready to look to sell my short and then position for something else to fucking swing. You got to be willing to take the risks at these spots, and not fucking think about it. I've taken a high day short so many fucking times in my career that I literally do not fucking think about it. I understand what my risk is. I know where my stop is predetermined.
Hallet, have you traded the Russell? RTY?
A couple years back. I don't really care for the Russell, and there's too much fucking equity to track in it.
Yeah, I actually like it. It's moves pretty well.
It's super friendly to small account users. Actually, if you trade the micro Russell, it's like if you have if you got to trade with fucking pennies, dude, that's where you go.
Damn, FRC back to the lows, $13. Paul basically said "fuck you" to banks today.
No,
Alright with
he said that they are fine, they'll be secured, but they will help him out. But then I'm thinking whatever.
But he also raised rates.
Yeah, when he said raise rates, he kind of okay, so we're gonna be fine, but you're still gonna raise rates, so that's gonna fuck us. Like he did in a sense, yeah. He reacted to what he said earlier once he said he's gonna raise rates.
Yeah.
So which is kind of fucked. That's why the market went up, saying okay, everyone's insured, we're good. They know about the crisis, and then they said okay, then they said okay, we're gonna raise rates, and that's when the market took a downturn, right? When he said that, everyone's kind of wait, you just said you're gonna help us, but
the real reason is I joined high day. That was the real reason.
Yeah, so once you see hit high, just short that bitch for me.
Only time you don't do that is after you've had a couple of fucking red days, dude. You're gonna start rethinking your life a little bit, and then buying all the lower days.
Yeah, I think I'm probably gonna exit my put, even though I got time on it.
It's funny, Yellen had a Senate hearing while she's still going, I think, but she said we're not gonna insure deposit insurance. for banks.
They said they weren't gonna raise the limit. That's what they said. They were not gonna raise the limit to insure him.
Yeah, well, Yellen said it separately. Like she kind of contradicted Powell.
Yeah, because Powell said they won't. I think what he kind of meant it as like they will insure them. Like, okay, all deposits are insured. But then she said, yeah, I don't know. I don't know. If you're reading in between the
Yeah.
lines, I mean, they just
Yeah.
say what they need to say to keep you happy. But in reality, one is telling the truth, the other one's telling a lie.
Yeah, it's just regional banks are just dying right now.
Yeah, they're fucked.
Like KRE is down 5%, FRC down. FRC is down 50% now.
I might just take the profit on this. But wanted a little bit more, but I like the way this contract is moving. Just chilling until end of day. What's the low of the day today? 196.43. I think. Is that? Hold on. Oh, 196.40. Oh, you just cracked it.
All right, boys. Have a great day.
All right. No one needs anything else from me. I'm taking off.
Have a good one.
Probably be in it.
Peace out.
Some